You're watching 13 on your side.
Tonight, we begin with the rising interest rates. In an effort to slow inflation, the Federal Reserve raised the interest rate affecting credit cards, home, and car loans by 0.5 percentage point. 13 on your side's Andrea Flores is here now with what that means for your wallet. Andrea?
Juliet, this is the first time the central bank has hiked rates this much since the year 2000, and it's all in an effort to even out supply and demand in the U.S.
They're trying to effectively raise the cost of borrowing.
In a historic move, the Federal Reserve raised interest rates by 0.5% to curb rising inflation.
What they're doing is they're selling treasury bonds to the banks. And so that takes money out of the banks and makes the banks think twice about lending out new money, making new loans, and they typically have to then make their loans at a somewhat higher rate.
That means money is now more costly, and in turn, borrowing is less appealing. That affects the interest rates on homes, cars, and credit cards.
The Fed is actually trying to slow down the rate of increase of the things we buy.
Assistant Professor of Finance at Western Michigan University, Dr. Matt Ross, says it's all in an effort to encourage people to save money. If those big purchase items are more expensive, that could change people's spending habits, driving down demand for products while the supply catches up.
That should slow down the rate of increase that we've seen in what we're paying for things.
That ought to show or bring in some relief on inflation.
Central Michigan University's Dr. Sean Goffnet says the Fed is walking a fine line right now.
Hopefully without pushing us into a recession.
And he says this move's effect on inflation, which is sitting around 8% right now, will take time.
Hopefully we'll see some relief over the year over the course of the year into next. Hopefully it's not prolonged. And again, ideally, hopefully the Fed will be able to balance this the best they can and not erode the growth that we're still seeing in our economy.
The central bank is expected to raise interest rates throughout the year to continue to cool down demand. Juliet?
Andrea, thank you.